This video is for informational and educational purposes only. I am not a licensed financial advisor.
Here comes the money.
Here we go. Money talk.
Here comes the money.
What's going on, SBA family? It's your man Stock Brother, and I'm back with another one. In this video, we are going to be covering a biotech company that is in the middle of a high-stakes battle with the FDA that could put a new weapon in doctors' hands to fight wet age-related macular degeneration. The stakes here are high, but if this company can pull this off, the gains would be enormous. I've been loading up on the stock like crazy in anticipation of the outcome of this decision. We're going to be doing a quick review of that company, so stay tuned. Family, before you do anything else, let's get 1,000 likes on this video. Please smash that like button. It helps YouTube push this video to more people, and I would really appreciate your support. So without further ado, let's take care of some business, then get right into it. Consider joining the Discord for real-time alerts of all my hot stock picks. It's an affordable service that won't break your pockets. By joining the family, you will be amongst motivated, like-minded individuals making money in the stock market. The link is in the description below. Let's get that paper, family! OTLK Therapeutics is a commercial-stage biopharmaceutical company based in Iselin, New Jersey, trading on the Nasdaq under the ticker symbol OTLK. The company has one singular mission, and that is to develop and commercialize a better, more standardized version of one of the most widely used retinal drugs in the world, bevacizumab, specifically for the treatment of wet age-related macular degeneration, what the medical world calls wet AMD. Their lead product is called ONS 5010, which in Europe has received full marketing authorization under the brand name Lightenava. We are going to come back to the science of this drug in a moment, but let's first understand what makes this company's position so unique. Lightenava is already approved and commercially available in Europe. Specifically, Germany and the United Kingdom launched first, and Austria followed in January 2026. The company holds 10 years of market exclusivity covering 31 European countries, and they have received a positive recommendation from NICE, the UK's top health technology body. Management projects gross peak European sales of over $600 million from the EU rollout alone. But here in the United States, the story is far more complicated, and that is exactly where the most explosive potential and the most risk lives right now. To understand why ONS 5010 matters, you have to understand wet AMD. Age-related macular degeneration is the leading cause of vision loss in Americans aged 65 and older. Nearly 20 million Americans are currently living with some form of AMD. The wet form, which is the more severe and rapidly progressing version, accounts for only about 10% of all AMD cases, but it is responsible for 90% of legal blindness caused by the disease. In wet AMD, abnormal blood vessels grow underneath the macula, the central part of the retina responsible for your sharp, detailed vision. These blood vessels leak fluid and blood, causing rapid damage to the cells that let you see faces, read, drive, and recognize color. Without treatment, patients can go from mild blur to legal blindness in a matter of months. Approximately 200,000 new cases of wet AMD are diagnosed every year in North America alone, and the number of people with AMD in the United States is expected to more than double between 2010 and 2050, reaching over 5 million. The current standard of care involves injecting anti-VEGF medications directly into the eye, stopping those abnormal blood vessels from growing. This is where bevacizumab comes in, and this is where OTLK Therapeutics has carved out its entire reason for existing. Right now, the US anti-VEGF retina market is worth $8.5 billion per year. Across the country, retina specialists are already using repackaged off-label versions of bevacizumab, the cancer drug Avastin, to treat wet AMD patients. In fact, according to industry data cited in the Outlook investor presentation, off-label repackaged bevacizumab is the most commonly used first-line anti-VEGF agent in the United States, used in 55% of first-line cases and in 34% of maintenance cases. There are an estimated 2.7 million such injections happening every year in the US, using a drug that was never specifically approved or formulated for ophthalmic use. That off-label use costs as little as $75 per injection. Branded competitors like Lucentis, Eylea, and Vabysmo can run over $2,000 per injection. Outlook Therapeutics intends to price Lightenava in the US at a point that payers and retina specialists have indicated is reasonable, sitting right in the middle tier of the market, competing directly with biosimilar ranibizumab and aflibercept products in the $1,000 to $1,500 range. If approved, Lightenava would be the first and only FDA-approved ophthalmic formulation of bevacizumab, manufactured entirely in the United States with standardized production, FDA-approved labeling, and robust safety monitoring. That is a huge deal. Doctors who are currently using a cancer drug off-label would finally have a dedicated approved option that was actually designed and tested specifically for the eye. Now let's talk about the FDA battle, because this is where the story gets complicated and where the stock has been absolutely punished. Outlook conducted a phase 3 clinical trial called NORSE 2, a 228 patient, randomized, double-masked, active controlled study comparing ONS 5010 against ranibizumab, which is Lucentis, the approved standard. In August 2023, the agency issued its first complete response letter, or CRL, citing a need for additional confirmatory evidence of efficacy. The company ran a second trial, NORSE 8, a 400-patient phase 3 non-inferiority study. NORSE 8 showed clinically meaningful improvements in visual acuity and dramatic reductions in retinal thickness at every time point. The FDA issued a second CRL in August 2025, again citing lack of substantial evidence of effectiveness. Outlook resubmitted in October 2025. Then on December 30th, 2025 came the third CRL, the same deficiency cited again. The stock then collapsed. Before that, OTLK was trading at its relative highs, above $1.50 and touching as high as $3.50 at certain points, with investor hopes riding on the BLA resubmission. At the time of this recording, the stock was trading at 31 cents. Ascendiant Capital maintains a buy rating with a price target of $6 as of March 2026. The average analyst price target is $3. That implies potential upside of over 1,000% from current levels if a positive regulatory outcome were to materialize. Now here is the part of this story that I think most people watching OTLK have completely missed. Because while Outlook Therapeutics was fighting its third CRL, the FDA itself was quietly rewriting the rules of the game. And the timing of that rewrite could not be more relevant to this dispute. On February 18th, 2026, just weeks after that December 30th CRL landed, FDA Commissioner Martin Makary and Vinay Prasad published an article in the New England Journal of Medicine announcing a seismic shift in FDA approval policy. The agency formally abandoned what they called the two-trial dogma, the long-standing default requiring two separate, adequate, and well-controlled studies before approving a drug. Under the new default standard, a single pivotal trial combined with confirmatory evidence is now enough. Let me say that again. The FDA has officially stated that one solid clinical trial supported by mechanistic data, pharmacodynamic evidence, or real-world data is now the default bar for drug approval, not two trials, one. Here is where we are right now. On April 7th, 2026, Outlook Therapeutics announced that it had submitted a formal dispute resolution request, or FDRR, to the FDA as a follow-up to a Type A meeting that took place on March 2nd, 2026. And the critical news in that press release is this: the FDA accepted the request and has granted a meeting with the deciding official to be conducted in April 2026. What exactly is a formal dispute resolution request? Think of it as a formal internal appeal within the FDA. Outlook requested a supervisory review of the disputed scientific position at a level above the team that issued the original decision. This is not a phone call or a casual dialogue. It is a structured process with real process expectations. The FDA deciding official is required to issue either a response or an interim decision within 30 calendar days of the meeting. The core fight has always been the same question: does the totality of evidence from NORSE 2, NORSE 8, mechanistic pharmacodynamic data, and a consistent safety profile across the clinical trials constitute substantial evidence of effectiveness? CEO Bob Jarr stated in the April 7th press release that the company believes the data from NORSE 2 and NORSE 8 provide sufficient evidence to support approval. So what could actually happen in April? The deciding official has real authority, and there are 4 realistic paths. First, the appeal could be denied, leaving the FDA's position in place and sending the company back to square one. Second, the appeal could be granted in full or in part, which would be a meaningful win for the company. Third, an interim response could be issued, buying more time for internal review. Fourth, and this is underappreciated, the FDA could provide a clearer roadmap of what confirmatory evidence would actually satisfy the agency's concern, even without a reversal. In my opinion, excluding a denial, the other 3 outcomes could catapult the stock to its previous highs. Outlook Therapeutics has real European revenue, a real product that already has full regulatory approval in 31 countries, a clinical trial that met its primary endpoint with statistical significance, and a safety record that the FDA itself has not questioned. The fight here is entirely over the evidentiary bar for US approval, not over whether the drug works or whether it hurts patients. I'm excited about the possibilities here, and as I stated before, I've been loading up on the stock. I'm keeping my fingers crossed that we get a positive outcome. That's all that I have for today, family. Thank you for watching. Follow me on Instagram and comment down below. Don't forget to subscribe to the channel and help your man out by smashing that like button. It really helps the video get seen by more people on YouTube. I'll see you all in the Stock Brother Discord. The link for that is down below. So until next time, let's get that paper!